Mike, good stuff as always. Okay, let's talk about the market with Alan Nuckman and do some trading. The chief market strategist at bullseyeoption.com. Alan, this time last week, the market was ramping. And then we fell flat on our face into the weekend, and we're starting off with VIX at 32. What say you?
Well, we still been taking out those lows. Now, when I was there last Monday, as it changed pace, we did get the big bounce we were looking for. We bounced about 5%, but we got no follow-through. So, the important thing is to see how we react when we get these lows again, the test and reject that we've talked about. But as always, there's something positive. And you and Ben just discussed the strength in the energy sector and how crude oil has had a complete reversal when it tested its lows, reversed itself, and now it's taken back off one more time. And that's because, not just because of OPEC, but that's because of the dollar. The dollar had a key reversal 2 weeks ago. And if you look at rates, yes, we're raising rates, but in 2024 onward, they declined back down to 4%, according to the futures markets.
Interesting. So a little tone here of some hope still holding out as long as we hold these lows?
Well, yeah, I think so. In a macro picture, I want to see how the markets react, not necessarily how they act, because that's most important. But what this time is somewhat familiar to me is what oil was acting like, the time in gold anyways, is like oil was acting like a couple of years ago. No one can find a good reason to buy it. There was no interest in it. It was going nowhere. So if you look at gold itself, gold's been between 1,900 and 1,500. It did have a bit of a bounce here recently with that dollar reversal. And it's making a nice bottom base in itself. We got some bullish divergence in the fact that it made new lows, but not new highs, implied volatility. So that's usually a sign that the short sellers have run out of strength.
Okay. All right. We'll see if we can hold on to it. Trying to right now. Market down about 1%. Tech in particular weighing here. I do notice, Alan, that when we're looking at places to buy, your picks generally have not been super heavy tech. Today, we're looking at Newmont in the mining category.
Right. I don't think tech's ready just yet. Yeah, the risk reward's on its side, but I would like to see a little bit more consolidation at a base. And that's what we see in Newmont Mining. Newmont Mining is giving the pattern I look for. It's been between 40 and 50 for 3 months. So it's been in this range, a breakout of its range target 60, and that's about the midpoint for the year. Let's remember that Newmont was at 85 here. That's the annual high. So this range, if it can get above the 45 midpoint in this range, then it gets to the top of the range 50, then it breaks out, gets to 60. There are some gaps up above it, 50 and 75. So there's a lot of potential for this to get moving. The way to play is with a March, 6 months of time, 37.5 call. That's below the low. The low's at 40. So you have the right to be long from 37.5. It's trading for about 7.5. So it's deep in the money. Again, the low is 40, and we have the right to be long from 37.5. The delta on this is about 70%. Like I said, it's 6 months of time, which is only $75 more expensive than buying the same January option. So again, buy more time than you need, just in case.
Okay. So the 37.50 call, and I hope that maybe we'll get a little bit of buying action, some outperformance in gold-related trades. I mean, last week it looked pretty good, but just couldn't take off. I mean, the chart for gold keeps selling off every time it gets to a previous high. It's not, Newmont is a little bit less volatile, I guess, at least.
Yeah, the Newmont price pattern is a little bit more attractive than maybe gold itself, but gold itself had a nice bounce. And again, the key here is the dollar index. Now, the dollar still is off its highs. It had made new weekly highs and had a lower weekly close. For me, that's a very negative sign for the dollar, which is a positive sign. And you could see how gold reacted, and you could see how crude reacted. So I put this in the same basket of mentality and psychology of where the market was in the oil market just a couple of years ago. Nobody wanted anything to do with any oil stock. Nobody wanted anything to do with crude oil. And they said that, prices would never come back. And I think we kind of get that. We're getting that psychology right now in gold. And so from a risk reward standpoint, this option's $6 in the money, 6 months at a time. And if we just get to the 50 level, that option's gonna double in value. So it's about putting on asymmetrical trades here that have limited risk, limited downside, but big gain potential with the staying power and to be able to sleep well at night with these kind of trades.
Okay, unless it breaks 40, in which case you're having nightmares.
Well, I have a 37.5 call. Even if it breaks 40, I'm still in the money. There's no nightmares.
Okay. All right, fair enough. Okay, low of the year, but you prefer it not to.
I would prefer
that's
what we're.
Yeah.
That's how does it go again? Call up, put down. Right? Is that how it works?
That's right. All right. A lot of technical downside. This thing opens up past there, but so far holding on to it. All right, thanks, Alan Nuckman. Appreciate it. The 37.5 in the money call, looking for Newmont to stabilize. It has been hanging out here for some time. So as gold is trended lower, arguably Newmont's had some sideways action. All right, putting stocks to the side, let's talk some bonds when we get back. Looking at the vol.